And welcome. It's Mary Ellen McGonagle with your weekly Edge show for Friday, April 19th. Today, we are going to take a look at those broader markets, quite a fall last week and beyond. Take a look at some of those sectors that are continuing to move lower and share with you which areas are up at the forefront as far as experiencing relative strength. Some of the headline news that drove price action, we'll dig into that. Also important news that is due next week. And last up is viewer question of the week. And it's all about when those biggest year-to-date winners start sliding. Is there significance? The answer is yes. We'll get into that. So first up on that news front, we did receive news that retail sales rose sharply in the first quarter, and it's anticipated to increase GDP, which is not good news. The Federal Reserve is on the lookout for the economy to at least stall and potentially deteriorate just a bit, but not on the lookout for the economy to continue to expand. And this is all about interest rates and potentially pushing out that rate cut program further with a strong economic backdrop. We did get home construction data with builder confidence stalling amid an uptick in mortgage rates. Also, new home construction saw its biggest drop in 4 years. Now, the home builders were down yet again last week. Fed Chair Powell did come out on Wednesday and he warned that we do need to potentially keep rates at a higher level because of the recently sticky inflation reports. Next week, we do get a very critical inflation data by way of the PCE, and this is very closely watched by the Federal Reserve. It's going to be coming out next Friday. Also next week, earnings season is going to pick up considerably. We saw Netflix and the result that had on the markets. We are due to see Meta Platforms, Tesla, Microsoft, and Caterpillar, to name just a few. So from here, let's go ahead and take a look. Where did the markets close for the week? And here we are, a daily price chart of the S&P 500, a couple of very critical metrics as it relates to the markets breaking below key support, and that would be this 50-day simple moving average. Took place earlier in the week, and that's a very commonly, widely followed area of support, certainly among big money managers, and the close below that and other factors we talked about did push the markets down over 3% for the week. So we are now in a downtrend with this RSI, that's a relative strength indicator, moving further into negative territory. And then this week, that MACD closed below that net neutral, joining the RSI in negative territory. Now beyond, let's go ahead and take a look at the 11 sectors within the S&P 500. And I've added a relative strength indicator, and this 2-month view is sorted in descending order. So up here are your generally stronger sectors, and we can see very defensive stance continuing to shape up. We have utilities up here at the forefront, up almost 2%. Consumer staples as well, up almost 1.5%. Also up here at the forefront, energy did sell off in the beginning of the week. However, news today of increased strife in the Middle East did push the group higher. We are still here with a positive RSI on XLE, the energy ETF, and that MACD also up here in positive territory, so still in good standing. Also, we talked about staples, and here we are. This is XLP, a number of consumer staple stocks on the move higher today, but we're not quite in positive territory. We do have that RSI just moving into a positive place. Also, we have XLP now back above this key 50-day simple moving average. So we have two key components. However, that MACD is still lagging. Would like to see that move up black line through the red and then get that into positive territory, but certainly an area where we can be looking for candidates to buffer against that weakness taking place elsewhere. Also, as we move through, let's take a look at some of these weaker areas. Technology getting hit quite hard, down over 6%. Take a look at this precipitous drop here. We are now in an oversold position on XLK, as it is the RSI below 30. We do also have that MACD now in negative territory. So, of course, earnings next week will be a driver. On the lookout for a potential bounce, but you do want to have a plan as far as how to identify a downtrend reversal, and my MEM Edge report is all about that. Going to be on the lookout for tech to move back into favor, not right away, but there are characteristics that are going to be critical to confirm that downtrend reversal. Also, taking a look at some of these other areas, financials were on the move higher, certainly today, with bank stocks, a couple of names moving higher on analyst upgrades as well as earnings. Not quite in positive territory here with XLF. We can see we're finding resistance at this 50-day simple moving average. MACD on the move, would like to get that. Actually, this is your MACD down here. We are trending sideways, but I do want to see that RSI get into positive territory. We will need some other factors. Insurance stocks were also on the move higher as these companies continue to raise their rates. So from here, let's take a look beyond these sectors, and I'll share with you some ETFs that I use that are very helpful as far as staying on top of movement beneath those sectors. You really want to get granular so that you can participate in that outperformance, particularly when the markets are strong, and then also make sure you're not overweighted in some of those weaker areas. So up here at the forefront is TNX, and that's the yield on the 10-year Treasury, and we do seem to be hovering around that 4.6%. While we did not go a whole lot higher for the week, we are still quite elevated, certainly well above that 4% level. So keeping a close eye, these rising rates are very determinant as far as other areas of the market. It negatively impacts growth stocks. And then we talked about housing and other interest rate sensitive areas of the market. As we move through, let's take a look. I talked about some of these bank stocks coming out with good numbers, up 2.6% in a very tough market today. This is KRE, the regional banking ETF, finding support at this blue 200-day simple moving average. But again, this area does still have further work. We have a number of bank stocks that are due to report their earnings next week. Another area I'm keeping a close eye on is XRT. This is the retail ETF for the S&P 500, and overall it does appear to be leveling. This was one of the first areas to fall out of bed. I follow these areas very closely again with my MEM Edge report, and to see it in a trading range is certainly encouraging. We will need to see other characteristics, of course, before turning bullish on the group, but it is definitely on my radar to keep a close eye on that because there are a lot of high growth names in there, and it could be a precursor to a move back into growth stocks. Not quite yet, though. Also taking a look at one of the weakest areas, IBB, and this is the biotech ETF, and I've been highlighting the weakness here because it can really be used as a guide to investor sentiment when the broader markets are in an uptrend and investors are bullish and confident. We will see a move into these stocks, but it has been continuing to deteriorate. These names are quite a bit more riskier, certainly than some of the blue chip names that are out there. Another name or area definitely worth noting is the fact that semiconductor stocks, this is SOXX, the group was down 6.5%, really sliced through that 50-day, continued deterioration, very high volume, negative RSI and MACD. Now, there was sound reasons for this sell-off, everything to do with two heavyweight semiconductor companies guiding their growth prospects lower going into the second quarter, particularly for chip demand outside of AI-related activity. Now, from here, let's go ahead and take a look at those M7 stocks. Most of them were down more than the markets. The NASDAQ did sell off 5.5%. But we can see from this list, among these big names that are heavyweights in that NASDAQ, the Microsoft was down in line with the NASDAQ, and 6 of the other M7 names were down even more. So as we move through this list, again, RSI strength to weakness, our only name that is up here above this key 50-day simple moving average is Alphabet. Holding in, it was a laggard for quite some time, moved into favor certainly last week because of AI-related products that they've introduced, positive momentum, but this is not the case with most of these Magnificent Seven names that are coming under selling pressure. One need only look at Tesla, down 14%. Now, this has been a laggard, but certainly the recall of their EV trucks is not good news. But let's take a look at heavyweight NVIDIA. It was down 13.6%. Most of that taking place today, a 10% decline, breaks right below this key 50-day simple moving average. Negative RSI and MACD. So what I did want to point out when looking at these former leadership names, and that would certainly include NVIDIA. We're now taking a look at Meta Platforms that's now below this 50-day simple moving average with a negative RSI. The relevance here is when you have those names that led the market, certainly year to date, begin to break key support, this is viewed as the loss of leadership. And the loss of leadership needs to be very closely paid attention to, because this factor, coupled with the fact that the broader markets are now in a downtrend, could lead to further weakness elsewhere. Many of these names were propping the markets higher, and as we lose leadership, we will in fact see further weakness. That's it for this week, everyone. Have a great weekend. I'll see you here again next Friday.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me over.